Hey guys, welcome to another video and thanks for clicking on this one. In this video, I would like to share with you the power of investing, and it's Christmas Day, and yes, I should be celebrating Christmas, but unfortunately I'm working, and sometimes you have to do what you have to do. But the thing is this, right? If we are focused on building wealth and saving money and investing, then we should be willing to hold ourselves accountable, and that means that you're able to look at where you were a year ago and where you are now, and you do some comparison and see, okay, what are the things you could have done better, especially as we approach the end of the year. Now, the reason why this is important is because if you don't do this, then you're likely going to repeat the same thing over and over and over again. And you don't want to do that. And I'm going to share some information with you that maybe this is not going to be new to you. I don't think it will be, especially if you follow investment channels or news outlets, because they've all been saying this through the year. And yes, there were times when the headlines can be scary because of the small corrections you see, but on the bigger picture, sometimes we fail to see what has happened through the year. By the way, if you're new here, my name is Steven. On this channel, we'll talk about finance. And please don't forget to subscribe if you're new. And if you're a returning subscriber, thanks for dropping a like. I'm not home right now. Like I said, I'm working and I wish I was, spending time with family. But we still gotta do what we have to do. Like I said, you have to show up, we have to work, and keep it real. That's the truth about it. So right now, I'm not using, I'm not in my usual space. I always try to say that sometimes, but this is what it is. So please bear with me as I share with you my screen. This is from Google Finance, and this is on the Dow Jones Index. As you can see, this information is showing the 1-day returns. Okay, it was up 0.91%. That was as of yesterday. Well, it says today, but if we go back let's do year to date. Okay, in the year 2024, the market on the Dow Jones Index has been up 14.8%. Now, this on the index itself was at 37,000 as of January 2nd. It was 37,715, and now as at December 24th is up to 43,297. That is on the Dow Jones Industrial Average. If I go to the S&P, okay, and I do year to date as well. All right, we started the year January 2nd at 4,700, about 4,742. And now it is up to 6040, all right, 6,040 as of December 24th. Okay, so as at yesterday when it closed, and it is up 27.35%. I can move on to NASDAQ. Let's do that. And let's do year to date as well. Started the year as of January 2nd, 14,765. And now we're up to 20,031. And it's up 35.66%. What does this really mean if you are not investing? If you have not been putting your money in the stock market, if you have not been trying to, let your money work for you, that means that you've lost a lot of time and opportunity in the market because the market has done what it has to do. I mean, like I said, the year is not even over. I can bet that the indexes are still likely to go higher, and there is a chance that next year will be different. We don't know what will happen next year. We don't know if things will be the same, if this will repeat itself. And of course, they always tell you to, be cautious, especially considering we've seen this bull run this year of 2024, and 2023 was also pretty good. So going into 2025, what are we likely to see? Well, the analysts out there are saying things like, with the president-elect coming in January, that things might be slightly different, but there's often a chance that cryptocurrencies will do well. So if you're not investing in crypto, that you may need some exposure in that. And of course, you should also consider small caps and medium caps as well as a portion of a portfolio, because those type of companies that are small caps or medium to large caps as well, mostly medium scale companies, they are likely to do well, because if the tariffs that the president-elect is proposing goes into effect, then the companies that would likely do really well will be the small caps to medium caps companies. And this is something that you should definitely be watching out for in your portfolio. And hey, I always say something. If you are worried about investing in a particular company and you're thinking it may not do well over the course of time, or you're not sure what is likely to happen, first thing I would say is consider ETFs. If you haven't seen my ETF video, check it out. And actually, that video has actually gotten a lot more views than expected on this particular channel. So check it out. I think it's got a lot of good information that you can glean from it. The other thing to also remember is that cryptocurrencies are definitely doing somewhat well around this period because of the president-elect again. And this is likely going to play out in 2025 in favor of those that have exposure in cryptocurrency. Of course, things can always change, things can always happen in the industry or in the market, but getting some exposure, not more than 10%, is always a good advice. I mean, generally some people say 5%, but at most I would say 10% if you are the type of person that likes to take on risk. If you don't like taking on risks, then definitely you shouldn't be considering anything more than 3 to 5% in your portfolio. That is just a good advice, because you don't want your portfolio to be down drastically through the period, especially if you think it's going to give you a lot of anxiety. Okay. The other thing I will say is this, right? You can generally not go wrong by investing in large cap companies. Yes, their returns may not be as good as the small caps, especially if those tariffs go into effect as it's been proposed by the president-elect, but they are generally able to weather the storm, which means that if you invest long term, you are to do well. Talking about large cap companies, all right, one of those Mag 7 companies, like things like Apple, Microsoft, Google, all this, Meta, Amazon, you can never really go wrong with those kind of companies, because they just have that, the presence and the ability to weather storms. And the fact that they are present in different parts of the world, different countries, different economies, gives them the ability to do well no matter what is going on. The advice though is, do what is best for you. If you're thinking about ETFs, then maybe you should consider investing in an ETF that is well diversified. You don't have to worry about a particular stock. You don't have to worry about a particular company. You don't have to worry about how the company is doing financially. All you do is put in your money on a regular basis and let it work for you. I thought I would share this information with those that are interested. Like I said, I'm working, okay, and it sucks, but it is what it is. I just wanted to share this with you. Have a Merry Christmas, and hopefully I'll see you again in the next few days. Hopefully. Anyway, I hope you guys have a great day, and take care.